Hi there, I'm Paul Bevan, mortgage broker and investment property specialist. Now today I just wanted to talk to you about purchasing off the plan and the finance landscape at the moment, particularly for investors. Now there's a couple of key and common areas in terms of the actual apartment itself. So having an internal living area more than 40 square metres, but preferably greater than 50 square metres, is really going to open up your lending options. Some of the things that might restrict your lending options are purchasing something like a serviced apartment, or sometimes dual key access is an issue as well. When we're looking at LVR ranges, the maximum LVR ranges at the moment as an investor are up to 90%. Obviously at 80% or below, you potentially eliminate the need for lender's mortgage insurance, and it's going to open up your options in terms of the parameters as well. As I mentioned, the insurers will limit you to 80%. If you have to go above 80%, you will have to purchase lender's mortgage insurance, and that will come with some additional restrictions in terms of the property that you're able to purchase. There will be some postcode restrictions. There'll also be high density restrictions as well. Now what that refers to is particular postcodes and developments where there is more than 10 apartments in a development in a particular postcode. Now to give you an example, I'll run through down the East Coast. So in Brisbane, or in Queensland I should say, some of those postcodes where you will be restricted to 80%. The Brisbane CBD, obviously 4000, 4001 postcode, Spring Hill 4004, the Southport and Labrador area at 4215, Surfers Paradise, Main Beach and Bundall at 4217, and Broad Beach and Mermaid Beach at 4218. Now, if we just move down to New South Wales, obviously we've got the Sydney CBD, the Rocks and World Square in that 2000s, early 2000 postcodes, Waterloo at 2017, and Concord West and Liberty Grove at 2138. That brings us down to Melbourne, and again the Melbourne CBD at 3000, 3001, St Kilda Road 3004, Southbank 3006, the Docklands 3008, South Yarra 3141, and South Melbourne 3205. Now, if you're familiar with any of those areas, the majority of those have a number of large high-rise developments, either recently been constructed or under construction at the moment, and that's one of the reasons for those restrictions. Each individual lender and the insurers will have a restriction on the number, percentage and or value of assets within a development that they will lend against, and that's designed to reduce their concentration risk. So for example, there may be a restriction for a lender or for the insurer to lend against no more than 6 apartments in a development, or it might be more than 25% of the total apartments in the development, or it could be a dollar value as well. So they might want to cap their exposure at something like $4 million, just as an example. So there you have it. If you have any queries around purchasing off the plan, if you have purchased and you're coming up to settlement, or if you're looking at purchasing, please feel free to get in touch on 0433 994 693.